If you've been hearing the name SoFi everywhere lately, you're not imagining things. The stock is heating up right before its Q1 2026 earnings today, and there's a lot going on under the surface. So what exactly is SoFi? Founded in 2011 as a student loan refinancing company, SoFi has transformed into a full-blown financial super app. Think banking, investing, loans, all in one place. The goal? Keep users inside the ecosystem and increase how much each customer is worth over time. A major turning point came in 2022 when SoFi secured a full banking license. That move lowered its funding costs and gave its margins a real boost. So why is the stock suddenly making moves? There are two big drivers right now. First is the short squeeze potential. SoFi has a high beta, around 2.3, which means it moves aggressively. On top of that, there's significant short interest, partly fueled by a critical report from Muddy Waters, which SoFi has pushed back against. Second is the earnings hype. The company reports on April 29th with expectations around $1.5 billion in revenue and 12 cents in earnings per share. Even after a recent bounce, the stock is still down roughly 28% year to date, so expectations matter a lot here. Under the hood, the business is still growing. SoFi closed 2025 with record Q4 revenue topping $1 billion and added over 1 million new members. Looking forward, management is guiding for about $4.65 billion in revenue this year, with earnings per share around 60 cents. They're also expanding beyond lending into fee-based services, tech infrastructure, and business banking. And here's a signal of confidence. CEO Anthony Noto recently bought nearly 85,000 shares in March. Wall Street? They're split down the middle. Firms like Goldman Sachs, Barclays, and KBW are cautious, with neutral or underperform ratings, but Mitsuo is more bullish, rating the stock as outperform. The average price target sits around $25, but there's still hesitation because of growth concerns and short sell pressure. Before getting excited, here are the key risks. Short seller scrutiny, especially around accounting concerns raised by Muddy Waters. High volatility. This stock can swing hard in either direction. And concentration risk. SoFi is heavily focused on the US market and competing with major, well-established financial players. The bottom line, SoFi is a fast-growing digital bank with a clear strategy, but it comes with real risks. Today's earnings report will be a major test of whether the company is delivering on its promises. If you're considering investing, make sure you understand the business, you can handle the volatility, and always size your position carefully.